What was your take on these?
Thank you, Rich, for having me today. Yeah, the initial release of China's trade data in Yuan terms seems to suggest that both exports and imports are maintaining very high growth momentum. And sequentially, we might have seen imports picking up a little bit faster than expected, which resulted in a narrower than expected trade surplus. But looking at the Q1 numbers in aggregate, it seems to suggest that export outperformance remains a theme in China's recovery. And the export outperformance was pushed up by a combination of global recovery in demand, as well as China's role in filling up the global supply chain gaps.
Peiqian, of course, they do paint a rosy picture of the recovery taking place globally, but we have to remember that there are base effects at play here. So what does it really tell us about what we can see as all of those base effects could sort of get ironed out and where we see growth in China ahead?
Yes, you have rightly pointed out that we are seeing a set of very positive growth data, and that was mainly because of base effect in Q1 2020, where China went into a full lockdown and all economic activities were stalled. So looking ahead into China's recovery, we think there are still ground for optimism because higher frequency data in March suggested that we are beginning to see the consumer sector and services sectors growth picking up. Today's import data also confirms that view that domestic demand is gradually recovering on top of the outperformance in external sectors. So going forward in the next few quarters, we think that we are going to see slower year-on-year growth figures normalizing to its long-term potential growth of around 5.7%. And in the short term, sequentially, we are probably still going to see a very solid foundation in the recovery.
Peiqian, what correlations can you make with copper? We know that copper's rally has stalled, and that's due to China's demand, which has dropped more than 40%. What's your reading on that?
Yeah, the commodity prices have rallied quite a lot. And I personally think that this is driven by short-term cyclical factors. And fundamentally, that's because China's credit impulse rebounded very sharply last year. Typically, China's credit cycle leads the real economic cycle, especially the commodity demand, by 2 or 3 quarters. So that's why we are currently seeing the commodity prices rally. But as you mentioned earlier, copper price rallies start to stall. And that's because we have seen credit demand peaked in Q4 2020. And this year, in 2021, the PBOC is embarking on its policy normalization. So from that perspective, we do see demand stabilizing in China, and there probably won't have much more room to run for the commodity space in the second half of 2021.
Talk to us about that policy normalization. Where's China in its policy normalization? Where do you think it will be by the end of this year?
Well, I think China's policy normalization focuses much more on credit growth and the control of debt as a debt ratio to GDP, and not so much more on benchmark rates, because the policymakers have been emphasizing the continuity and stability of China's policy to make sure that China focuses much more on its uneven growth momentum, which we think that the PBOC may not be focusing much more on benchmark rates, and we don't expect any change in PBOC's benchmark rates such as 1-year MLF or 1-year LPR rates this year, but rather we think credit impulse slowdown will be the main theme of policy normalization.
Peiqian, it is interesting to see when you take a look at the GDP projection from China, it is 6% for 2021, but Bloomberg Economics is projecting an 8.5% growth for the year. What do you make of the discrepancy between the two?
Yeah, thank you for pointing out that. I think that's a very interesting observation because consensus from economists do suggest that China's growth will be at its relatively high level of around 8 to 9%, but the policymakers are setting a very conservative GDP target of above 6%. I think that reflects a fundamental shift in policymaking that reduces its focus on the numerical targets of GDP growth, but rather focuses much more on its medium policy targets as well as the quality of growth.
Peiqian, we've got this story about Huarong's bond rat, which is deepening, and it's spread to other companies, property companies, dollar bonds as well, which have been tumbling alongside of it. Does this, in your view, actually pose a systemic threat to the financial system?
Yeah, I think the bond default does not really pose systemic financial risks now, because China is standing in a different position in 2021 after its multi-year of deleveraging efforts. So I think the policymakers are aware of the localized or idiosyncratic bond market risks, but the PBOC is carefully managing the financial market by providing stable liquidity in the system. So therefore, I think I might sound a little bit dismissive, but I don't think in the near term there is any systemic financial risks in China.
We discussed these numbers. The thing is, looking ahead, what does it tell us? We already talked about growth here, but what does it tell us about the so-called dual circulation policy instituted by President Xi Jinping? And on top of that, what is it also telling us about as the economy there tries to rebalance towards the services as well?
Question. So looking at China's trade sector, we do see two different pictures in the short term and the long term. In the near term, we see exports outperforming, which I mentioned earlier was driven by a global recovery in demand, as well as China's role in filling up the global supply chain gaps when other countries went to lockdown. But looking ahead in the longer term, China is embarking on this dual circulation strategy, which in my view is a tilt towards domestic demand. So in the long term, we don't see the very wide trade surplus to be sustainable. And we do think that China will rely more on domestic consumption rather than export demand in terms of its trade pictures. And we do see more balanced current account in terms of percentage of GDP in the coming years.
Peiqian, what's the outlook for the yuan where you're concerned? We're just seeing how the yuan had its worst month versus the dollar since the trade war.
Yeah, for the outlook of renminbi, I do think that there are positive and negative factors playing out in coming months. On the positive side, we see China's continued trade surplus outperformance, as well as continued capital inflows, which will be driving stronger yuan. But on the other hand, we do also see the potential of US-China relations worsening, being it on the tech or on the political front. So on the balance, we do see yuan pointing towards a marginally stronger level at 640 at end of 2021, but not much from there.